Hi, and welcome again to another edition of Market Analysis for today, January 4th, 2024. I'm Giovanni Benacourt, analyst, trader, and educator with Vantage Markets. So, the Federal Reserve message may be getting lost in translation. Despite stocks' retreat at the start of the year, which extended as the Fed released minutes of the December meeting yesterday, traders continue to expect considerably more interest rate cuts in 2024 than Chair Jerome Powell has intimated. This isn't exactly a new phenomenon, just as Powell likes to remind audiences that inflation has thrown a few head fakes in the past, so too have markets been fooled by the timing of a Fed pivot. Last month, the Fed signaled 3 rate cuts with its new projections. The market promptly priced in 6. Even after this week's minutes, which were considered slightly less open to quick cuts than comments from the press conference held 3 weeks ago, that's still the consensus view. The market did noticeably pull back expectations for the first rate deduction to arrive in March. The odds on that are now about 66% compared with 73% a month ago. Richmond Fed President Tom Barkin noted yesterday that the March meeting is a long way away and a lot can happen before then. He is right, but March is also shaping up to be a key rendezvous point for how current market expectations square with reality. The extent of future rate cuts and when they start are both important for markets. Later hikes mean tighter conditions for longer, which is bad for company earnings and thus bad for stocks. But those same cuts can also cause a spike in commodities, specifically crude oil. So keep that in mind. So far this year, investors have merely tweaked their outlooks, expect bigger gyrations if it starts to look like March will disappoint them. So with that in mind, let's take a look at what we can expect for today's fluctuation in the markets. So we have been just selling off a correction, a pretty good and pretty deep correction. All this week, we started the year, just trending lower. I have my support at 16,200, but looking at this chart, a daily chart, and when you want to take a look at how much of a correction are we going to expect in technical analysis, we have something called the Fib retracement tool. So if you use that tool, we want to come and analyze when all of this move began. And for me, it began on December 7th. So let's take the low of that movement and the high of that movement, which was basically at the end of the year, of the month of December 28th. And then we expand that, let me see, let's do it correctly, and we expand that. So with the Fibonacci retracement tool, it uses the golden ratio as the projection to time or to tell where would the market turn around or find a rebound, and that is the 0.61 proportion. That's the golden ratio proportion. So looking at this, we are almost nearly there. So if we do continue to do a pullback, a correction, you can expect and perhaps speculate where the market will rebound. So around this area is where the market perhaps will rebound. So let's see if that will happen today. So as the market just continues to trade lower, if it happens to continue to just run by that golden proportion, well, my support is at that psychological round number of 16,200. And that same tool, you can use it in the S&P, which has basically almost the same fluctuation. So the S&P, I'm looking for 4,700 as my support. So trending lower towards that target. Selling would be that for the S&P and the NASDAQ. Dow, however, has a bit different of a situation here. Perhaps the Dow will claw back into yesterday's trading section, into the body of yesterday's trading section. So will we come back and revisit yesterday's high, or will at the open will we just continue selling off and trend lower? So 37,600 could be that point. I have mine at right 37,400. Crude oil. All right, so crude oil. Yesterday we spoke about looking at crude oil reaching 72, and if it's surpassed 72, we could speculate to reach 74. It didn't quite get to 74, but it did surpass 72, so that was a pretty good trade there. Today we're looking to continue to push higher. I'm still looking for 74 as my resistance. If we do happen to go to break this resistance of 74, then you can speculate to reach this double top right around 75.5. Then we have Nat Gas, which is just in a parabolic movement, so we could probably speculate to reach $3. Then we have gold. I'm looking for 2020 as my support. So as it trends lower, so that could be a nice place. Silver is looking really hard to stay around $23. So, or perhaps it will just lose its shine and just continue to drop towards the 22.5, which is the low of December 13th. Then we have copper, which is also trending lower. Basically, we are in yesterday's trading session, so that in itself can be a support level. So now once it's broken, I'm looking to reach my support at 377.20. Bitcoin is, look at Bitcoin, that big fluctuation. It had a low of 40,000, almost 41,000, and then a high of almost 45.5. So 44 is, I'm looking at the internal psychological resistance for it, okay? And my support at 4,200. Then we have the currencies are looking to climb back back up towards the 109.5 in the euro, and the pound looking to come back up to 127. That would happen if we see that the dollar index drops. But if the dollar index happens to make another pop and tries to again reach 102.5, then you will definitely see the currencies retreat and the metals also trend lower. So at 2020 for gold, and perhaps that 22.5 for silver. And now copper, that could probably put some pressure on copper to reach $3. But if we see that it continues to trade higher, but if you see that it drops, okay, and it comes back to, let's say, yesterday's low, then you definitely will see a copper reaching $3 faster. Okay, so that's it for me today. Have a great trading day, and I'll see you tomorrow.